This is the Captain Crypto Show, navigating the treacherous seas of cryptocurrency to help you arrive at port safely and secure your loot. Here's your host, Kylan Hurts.
All right, you scurvy dogs. Welcome back to the Captain Crypto Show. For those of you who've seen some of our previous Sink or Sail episodes, I think the last one we did was on EOS. Essentially what we do is we take white papers and we do a little bit of a technological analysis with it. And we kind of give you our initial thoughts without doing too much research on the background of the project. Mostly we're just looking at the white paper and giving you our thoughts. And who's we? Well, I'm Kylan Hurt. I'm a front-end developer at Edge, and I am joined by Mr. William Swanson, who's the chief architect at Edge.
Yar, greetings, Captain.
Ahoy there.
Okay, so the white paper for RaiBlocks is entitled RaiBlocks, a feeless distributed cryptocurrency network. And I guess one of the first things that I have to mention here is that they are no longer going by the name RaiBlocks. They recently rebranded within the last couple of months to the name Nano. And now that is not to be confused with the hardware wallet product that is offered by the company Ledger. So that could cause a little bit of confusion, and I think some people have some reservations about that rebranding. But if we say something about RaiBlocks, that's essentially the same thing as Nano. And essentially it looks like this white paper was created by Colin LeMahieu. I don't know if I'm pronouncing that right. And it sounds like he's kind of like the brainchild for this project. I looked at their GitHub, and it looks like they started committing code on the software at some point in, I want to say, August 2014. So they've been working on this for a while, but definitely within the last half year or so, it started to get quite a bit more attention, primarily because it is taking a very new approach to scalability. So I guess if we are going to tackle the topic of scalability, and especially as it relates to Nano or RaiBlocks, I guess we kind of need a point of reference. So obviously, most of you who are in the audience are probably very familiar with Bitcoin, maybe Ethereum as well. So William, how would you say that Nano or RaiBlocks compares when it comes to that sort of stuff to, let's say, Bitcoin?
Well, that's actually a really interesting question. I think that's what it really comes down to. Is this project even worthwhile? Is it doing anything better than what Bitcoin is already doing? They say a lot of things at the introduction of their white paper. They say it's infinitely scalable and no problems whatsoever, but is it actually going to do that or not? I think that's what it comes down to. So in Bitcoin, I want to make kind of a distinction between two levels of transactions. You have unconfirmed transactions, which are money you've just sent out that have not yet been included in the blockchain. And for those, there's actually pretty okay-ish security in the sense that the network will always accept the first one it sees and reject any subsequent ones. So if I'm trying to, I guess we should back up and talk about the double spend attack, which is kind of what this all comes down to.
Right. So what is a double spend attack?
So imagine I've got a bank account, traditional Wells Fargo, Bank of America, whatever account, and I've got $100 in that account. And I go and write two checks. One of them says, Kylan Hurt, here's $100. And one of them says, my other buddy, here's $100. And you both go deposit them. Now, I've only got $100 in my account, so both checks can't clear. Right. One of them will be dropped and the other will be processed.
And most likely the one that, gets processed first, you would think, right, is the one that'll get the money. The second person will end up with a check that bounces where they won't end up with the money.
Exactly. So if I'm a merchant and I'm accepting cryptocurrencies for payment, my question is always, did somebody write a second check?
Right.
How will I know if somebody wrote a second check? How do I know that no such check exists? And if I can prove that this is the only check that could possibly exist or be accepted, then I'm good, my money's real. If otherwise I see, there was a second check written, now I've got to not give them the product, not give them the service because I might not get my money.
Right. And at what point is there a point where the check that you are processing, is there a point where you can say you can be certain that even if there is a second check, that second check will get rejected? In this case, by the network.
Exactly.
And essentially, with Bitcoin, that's essentially what a confirmation or multiple confirmations do, right?
Right. Once a transaction gets confirmed in the blockchain, I know that it's going to be accepted for all of time. No one's going to have a conflicting one. Well, maybe not. I know that. There's a cost to doing a duplicate check, and that cost gets increasingly expensive as more confirmations happen.
Becomes more and more unlikely, extremely, almost infinitely unlikely.
Right.
Almost infinitely unlikely.
Well, here's how it goes. In order to make a block in Bitcoin, I have to burn roughly $100,000 of electricity. What is it? It's like 25 Bitcoins, $6,000 a Bitcoin. You do the math.
I think it's 12 and a half now, right?
Or is it?
You're right.
Yeah.
But it's somewhere around. It's a lot of money.
It's a lot of money, right? And so we have this money being spent on a block, on electricity to build this block. If the block is accepted, then I get a reward that's just about equal to what I spent in electricity. Maybe slightly more, so I get a little bit of profit.
Right.
If the block is rejected, I lost all $100,000. So if you had a bet and someone put money on the table, says 100 to 1 that this guy's going to win, you're going to follow that guy's bet because 100 to 1 is pretty good odds that it's,
Right.
So that's what it is. If someone's basically saying this money is moving in the correct account, and if I'm wrong, it costs me $100,000 to be wrong. So if you're buying anything less than a house, you know that one block confirmation should be enough to really lock it in. So that's kind of the level of, I would say that's like the gold standard, right? That you have this money on the line saying that this is the valid transaction.
Right. Do you think the fact that they use proof of work with Bitcoin, does that make scaling more difficult for Bitcoin?
No, that's the big debate, isn't it?
Right. Okay.
And when we come down to the section about scaling RaiBlocks, I think that will be an interesting discussion.
Okay.
So the other level of Bitcoin confirmation is not confirmed, not in any block whatsoever. And then there it's simply what you said with the bank, right? The first check that gets in wins. So if I send a transaction and I receive a transaction and I wait 20, 30 seconds, there's actually numbers that people have done research on, and I don't see any conflicting transaction come in, I can actually be relatively assured that everybody has seen it and no one's going to accept the conflict.
Right. And that's kind of what Bitcoin Cash is working on?
Well, so that was true on Bitcoin,
the
regular Bitcoin core. They got rid of that rule. They said, we're going to do something called RBF, where I can
replace by fee.
Right. So if I have a transaction and I want to replace it with another transaction, I just send one with a higher. So it's like you're allowed to write duplicate checks and have checks bounce all the time, just as long as you're paying more money to the bank to kind of bribe him to take your best check.
You can outbid your own old transaction. It seems like they had a little bit of pressure maybe that they needed to do that because transaction fees were so high that people's transactions were sitting there in the mempool for weeks at times.
Right. So they needed a way to like unbreak the stalemate.
Right.
So they had RBF, which is, controversial. I think it made sense in the context of full blocks and unreliable transactions, and Bitcoin sucks, right? Which it did for a long time. And Bitcoin Cash said, no, we're going to have empty blocks and low fees, so we're just going to go ahead and put the original rule back, the first scene, and that's it. There's no replace by fee.
Right, so that's a pretty critical difference. Obviously, SegWit's another part of it. Second layer solutions, their openness or closeness to that is another one. But yeah, I think the replace by fee was a pretty, that's almost like crossing the Rubicon to a certain extent. You can't, that's a divergence. It's a pretty critical divergence between Bitcoin and Bitcoin Cash.
And I think this is actually a relevant discussion to this white paper because they're kind of introducing maybe a third way of doing scalability. And so between Bitcoin's 1 megabyte blocks, Bitcoin Cash is we're going to scale everything on chain, and RaiBlocks is we're just going to get rid of blockchains altogether. It's like where does the truth lie? What is the solution?
Right. Okay, so the third section that we have in this white paper is entitled Rai Blocks Component. So we're going to go down the different components that they have here in the white paper in order. First one is account. And one thing I noticed here is in this Rai Blocks white paper, when they're talking about account, it sounds like essentially like they want each person to kind of have their own blockchain, which is almost synonymous with account within the Rai Blocks technology, I guess you could say. And it also sounds like they're only going to have one public address per account. So also if you're one of those people who likes to have a different address for every transaction, maybe for privacy reasons, then RaiBlocks is not trying to be that. They're not focusing on privacy.
Right. So they're very much like an Ethereum type of thing where you have one address, one private key, and all your transactions are related to that one address. Now, you could have multiple addresses if you wanted them, right? But in order to spend money, you can't spend from multiple accounts at once. You'd have to first consolidate all your funds into one and then send
account, then send out from there.
So you're kind of below your cover there. So it's not really a privacy coin at this point. It's about as good as Ethereum is. So it's actually a little bit worse than Bitcoin in terms of privacy because you can't have SPV wallets with hundreds of addresses.
Right.
And within each account, it looks like every address, every account, whatever they want to call it, has a list of transactions that have occurred to it. And those are linked together kind of like a blockchain, but not really. And I think the term blockchain here is a little misleading. I actually have serious issue with them calling it a blockchain.
Well, I mean, it is. They're also referring to it as a directed acyclic graph. Is it? Do you know? Is it something where can something be a blockchain and a DAG, quote unquote DAG, a DAG as well?
I think it's possible to kind of be all things to all people, right? Depending on how you use the words, right?
Right.
To give an example, blockchain. When people think blockchain, they think Satoshi Nakamoto invented Bitcoin in 2009.
Right.
But the blockchain concept existed for years before that. It wasn't called a blockchain. Git existed for years. It was used to develop all kinds of software, and that thing is a blockchain.
Yeah.
Every commit that you make to your Git project, every change you make to the source code gets recorded in a block. There's a cryptographic hash.
It's even got its tree, right?
Yeah, everything, it's exactly a blockchain. And so to say that this is a new technology or that it's somehow related to Bitcoin it's been around for years. And so, yeah, this is a blockchain in the sense that you've got, one transaction linking to the transaction before, but it's not a Bitcoin blockchain. It's merely the data structure that's existed for decades.
Right. Okay. There is one section here that kind of caught my eye here. Section 3C says ledger. The ledger is the global set of accounts where each account has its own transaction chain. There's a key design component that falls under the category of replacing a runtime agreement with a design time agreement. Everyone agrees via signature checking that only an account owner can modify their own chain. This converts a seemingly shared data structure, a distributed ledger, into a set of non-shared ones. I thought that was that's kind of unique, I guess I would say, or strange language. They're talking about an agreement made during design time. Essentially, it's almost like a static, right? Like a compile time versus runtime. It's hard for me to figure out exactly what they mean here, though.
I mean, in Bitcoin, the design is that we all agree that the block with the highest hashing power wins. And we'll follow that. And that's a design time agreement that we're all going to follow at runtime.
Right.
And so to say that we've replaced a runtime agreement with a design time agreement, it's like, yeah, but that would mean no money could ever move ever because we've all agreed at design time who had every balance, right? So it's kind of a meaningless statement, I think.
Yeah, I don't know if they're trying to say that, that we're agreeing that there's some sort of cryptographic certainty in place that we are going to accept.
But it's no different than any other chain, right? The only way to move money from one balance to another is to sign a transaction with the key from the original account.
Right. Okay.
So there's nothing new here that I can see. The only other thing they say is this takes a seemingly shared data structure, a distributed ledger, into a set of non-shared ones. And I guess you're right. If no money is moving, I can have my ledger and you can have your ledger and we all agree that what our balance is. But as soon as you try to move money from mine to yours, now we've formed that link, and now somebody has to be watching us do it, and now it is a shared.
That's what I'm thinking. Yeah. If you're like a full node or something like that, things are definitely being shared.
Yeah, as soon as money starts moving,
information's being shared.
Yeah, as soon as money starts moving from anywhere to anywhere else, now you've got to start checking for double checks. Right. Have I tried to spend the same money twice? And that's a global problem. Right. So yeah, the money just sitting there statically is a distinct data structure, I suppose. But as soon as you try to do anything, now it becomes shared, and everybody is sharing the same global state of there are no double spends. And
they all have similar incentives to make sure that, if one person's balance is off, according to the network, then that compromises the entire network, right?
Yeah, because it's
not like it's isolated over there.
Yeah, if you and I somehow do some scam that gives me double money that it came out of thin air, and I try to spend that money on a washer machine somewhere halfway across the country, that's fraudulent money that he can't accept. He cares deeply about what happens between you and me.
Right. Okay, so Section 3D says it's entitled Node, and here they're kind of talking about it kind of similar to what they're talking about with Bitcoin, where you have like full nodes or like light nodes, I guess. The software manages the ledger and any accounts the node may control, if any. A node may either store the entire ledger or a pruned history containing only the last few blocks of each account's blockchain. So they're saying, essentially, if you want to be you can be a full node where you try to store the entire ledger. That sounds like it could get pretty a pretty large data size, but of course, maybe some people would still be open to doing that. Or you can do a pruned history where you only look at the last few blocks of each account's blockchain. So that would be kind of like, I don't know, I guess a lighter client.
Well,
or a lighter node?
Well, this actually goes to a section a little bit later on in the paper where they say that each transaction actually has the final running balance of that account.
Right.
So if I know the final running balance that Kylan right now has 20 Nano in his account,
Right.
I don't need to know how we got there. I can throw away the fact that you bought pizza yesterday and...
If you're certain then that the way that we got there, that there were no inaccuracies, mistakes, right?
Right.
So I guess that's why there would be incentive for some people to run full nodes. But yeah, in general, instead of, or in contrast to most cryptocurrencies, you're not summing up your transactions, or at least the last block says they'll do the sum for you, I guess, so that the transactions beforehand, you can delete them. And for that reason, it's easier to scale. You don't have to hold as much data on your node.
Right. So they actually describe later on how you boot up a full node. And one of the things you have to do is download the transaction history, the ledger for everybody in the whole world. And at that point, you need to have the history so you know, okay, this is how we got to this balance. But once you've got the balance, you can throw everything away and just go forward from that point.
Right.
And if you had some way of trusting the balances from a peer, you could actually skip the download, but they don't describe anything like that because, of course, you don't want to trust anybody.
Right. Okay, so in the next section, this is section 4, it's system overview. And they do go into some of the more technical details. A lot of this... Well, some of it's pretty standard stuff, but I know there's an area where they talk a little bit about how they do have a little bit of a, I don't know if I call it proof of stake, but a little bit of a staking system, right, William?
Right. So the idea is in Bitcoin, you resolve conflicts using proof of work. In Rai Blocks, you actually resolve them using a vote. And the vote is based on how much money you have behind your vote. And so normal folk who have just money in a wallet that they use to buy groceries or whatever, they don't want to
have to try to vote.
Run a full node and
they don't have time for that.
Yeah. So what you can do is you can say, okay, I've got $100 in my account. I'm going to assign that voting right that goes with that money to some other person, some other node, and they can vote on my behalf. So I don't have to worry about doing the vote, but my money is still being put to use and it's still voting on stuff.
Yeah, I'm trying to remember. I assume there's some sort of reward for
There's no
voting.
reward for voting.
So then what's the incentive?
Well, that's a good question.
Oh, man. I guess maybe there's a little bit of incentive. You want to make sure that the network works well. I guess if you have money on the network, then maybe in a sense, you do have stake in the sense that you want to make sure that the network does not get compromised.
Right.
But that seems like it would be less incentive than some of the other.
There's no monetary reward for running it. You have to find other warm, fuzzy rewards somewhere else.
Right.
And those can be actually profit motive. There could be, like, I will give an example, right? Edge runs a number of servers for our wallet customers to connect to. So we have Ethereum, we have Bitcoin, we have all kinds of other currencies that when you can open our wallet, you can connect to our servers, you connect to other people's servers, but we want to run at least some servers so you have a baseline of connectivity.
Right.
And in those servers, we're spending, I don't know how much money per month, but it's not cheap to run a lot of beefy servers that can serve all our customers. So we have a profit motive to provide this service. And so I imagine if we added Nano or RaiBlocks, we would probably be running servers here as well.
Right. So, okay, you're right. There are other types of incentive. So I'm actually going to point this out because this is actually very interesting. So with RaiBlocks, there's no mining that's going on.
No.
They're not creating any more units. So the question is, okay, well, have they already made their quote-unquote tokens, their native coins? And they have. And have you heard about the process of how they did it?
It was all faucets, wasn't it?
Yeah, it was a faucet. So people would go to, I assume, would be a website, and they would enter in a CAPTCHA, right, to prove that they are human. And in return for that work, they were given some RaiBlocks, some Nano. I thought that was kind of unique, although you do have to think if someone were to make a bot that was really good at solving CAPTCHAs, maybe you could fire them out, get a bunch of Nano. But I guess those things are kind of notoriously difficult to try to automate, right?
Right. That's the idea. If the CAPTCHA was built right, it should be hard to overcome.
And I think they could probably check people's IP addresses and some other things to make sure there's no funny business going on. But so for those of you who are thinking, oh, maybe I can get involved with mining Nano, don't bother. You can't. There will be no more units created.
Yeah, they created an initial transaction when they first booted the network that had all the Nano in the whole world in one account.
Right.
And they just started spreading it out. And that money is now everywhere, and that's what it is.
Right.
There's no more that can ever be created.
Right. Okay, so in section 4, part H, they talk about proof of work, but it's not really in the context of mining. What they're saying here is that for an individual account, if you want to send money, then you have to do some work on your machine. So that way there is some sort of cost to sending transactions, and hypothetically, that should reduce the amount of spam. Do you think, have you seen other systems like this where it's the individual person sending or receiving the transaction who has to do the work on their machine?
Yeah, IOTA has a similar-ish system to this. And it's actually, it kind of gives lie to the fact that they say it has unlimited scalability.
Right.
If they had infinite unlimited scalability and every account was truly isolated from every account, then you wouldn't care. Somebody could spam out bajillions of transactions per second between him and his buddy, and you wouldn't notice because it'd be isolated to them and no one else should care, right? But the fact that they have this in place is kind of like, I think it's like, yeah, we're actually not infinite scalability. We have to worry about people like sending billions of transactions between each other. We want to make that a little expensive because otherwise the double spend detection system, which we haven't really talked about yet, has to now deal with all their mess and clean it up. So we don't want that to be too expensive. So instead, we're going to go ahead and just say, you're limited to how many transactions per second based on your CPU power.
Right. Okay, well, section 5 for this white paper starts to talk a little bit about attack vectors. We did mention double spend attacks as one type of attack vector, but obviously there's a bunch of different ways you can attack a system. And since RaiBlocks / Nano is in many ways technologically it's very different from other, I guess you could call them traditional blockchains. I think it's good that we go over some of these attack vectors and what's the consensus algorithm, or what is the method of consensus that they use in order to protect their technology, their network from attacks. So, William, what do you think when if you're reading through this section, are there specific types of attack you think that are more likely, or do you think that the solutions to these sorts of attacks are feasible?
I actually think, interestingly enough, Section 5 doesn't discuss the most potent attack against this network. Which is actually a partition attack.
Okay.
And to understand what that means, we have to kind of first discuss what their consensus mechanism actually is, because we kind of danced around it throughout this talk.
Okay.
But it hasn't really come up like in any concrete way. And even in the white paper, it's kind of spread throughout different sections. So the idea is, basically, it's kind of like unconfirmed transactions in regular Bitcoin. If I send a transaction out and nobody detects a conflicting transaction within a period of time, and they actually set it to about a minute,
right,
then we consider that transaction good. Everybody who's online updates their ledger, and that's the official transaction.
Right.
If within that minute we see a conflict, we see a very different transaction that we don't agree with, that conflicts with the first one, that doubled spend, then we get to voting. And all those representatives that we talked about earlier,
where you give your stake to the people who are voting, and the voting power is, I assume, proportional to the amount of the stake that they have.
Exactly. So those voters now get together and say, okay, there's two conflicting checks. We got to vote on which one we're going to cash and which one we're going to throw away and bounce. And so at that point, you hold a vote. You get the quorum, how many people are online right now, and then out of that quorum, you wait until you have enough people who have voted, and then based on that vote, this is the real one and that's the false one.
Right.
And if you don't get quorum, then you try to vote again until you finally get a resolution, and then you're done.
Right.
So those voting nodes have to have the whole history of the blockchain.
Right.
Because how else could they do their job?
Right, exactly.
Yeah, they have to see every transaction that's coming through the network every time. Anytime I send money from you to me and to me to someone else, they have to see every one of those transactions.
If I'm curious, if RaiBlocks gets really popular, do you think that holding the entire blockchain will more feasible or less feasible than some of the other blockchains that are already out there? Do you think it'll scale better with regards to like storage capacity?
Right. So I was recently at Satoshi's Vision, a conference. It was actually kind of refreshing because it was like the only conference I'd been to where it wasn't a bunch of ICO pump and dump scams. It was like, we're just a bunch of engineers. We're just going to talk about how do we make Bitcoin the best currency.
Right. And that's a very Bitcoin Cash oriented conference, right?
Yeah, I should say Bitcoin Cash. People will always get mad if you confuse
yes, they will.
Anyway, yeah. But all the stuff they talked about could apply equally well to Bitcoin itself, because it's like, how do we make blockchains secure and better? Anyway, they had an interesting talk where a guy came on stage and he said, I can't remember his name, but I'll find it later. Okay. Anyway, he says, there's 10 billion people in the world, approximately, right? Assume they're going to do 50 transactions per day.
Right.
The current size of a Bitcoin transaction, that's about 4 terabytes of data
per day.
Per block.
Per block.
Minutes.
Whoa.
Okay. and then
even if you could store it, internet connection becomes a very serious issue there.
Well, so he said, okay, so let's talk about what that would look like, right? Because what scalability means is not I can run the whole world on a Raspberry Pi.
Right.
What scalability means is if I add more hardware, I get a proportional amount. If I double the CPU, I can do double the number of transactions per second. If I double the storage, I get double the number. That's scalability, right? Because you can just throw more hardware at the problem and you win.
Okay.
And so he did a big old calculation. He said, okay, how many terabytes of internet bandwidth am I going to need to buy? What's that going to cost, right? And he did some analysis on what the current price structure was. It's okay, that's going to cost so many dollars over the next 20 years.
Okay.
And then how much is it going to cost for storage? How many hard drives am I going to have to buy per month to jam into this giant rack?
Right.
How much CPU is it going to cost to validate all these signatures? I basically did the whole thing. His initial number was 20 million, but using like optimized stuff, like, okay, we're going to use
per year or per
20 million for 20 years, so $1 million a year.
Oh, okay.
To run a data center capable of processing the whole world's transactions. Which it's a lot of money.
It's doable.
It's doable, right?
There are probably hundreds of organizations that would be able to do that.
Right. I mean,
if they would want to.
You don't think Google spends more than that per day on data centers?
Right.
You know what I mean? And Google is basically processing the whole world's search and the whole world's advertising. So they have a good profit motive there.
Right.
And if Bitcoin or some currency took over the world and was the world's monetary system, you better believe that every bank is going to have one of these, every merchant processor is going to have one of these, every wallet company is going to have one of these. Because it's business meat, But he got it down 20 times lower than that. So it's like $50,000 a year by the time you use ASICs to validate transactions, and, specialized storage and pruning and all kinds of other stuff.
Okay, so hypothetically, let's say that these full nodes on the RaiBlocks network, obviously they are full nodes, and then getting back to RaiBlocks, when they are actually doing the sort of validation, because you were talking about a possible partition attack.
Right. So the interesting thing is, if you had RaiBlocks take over the whole world and become the world currency, then that exact same calculation, that exact same storage, bandwidth, monthly cost of $50,000 a year, whatever the number was, would apply to a RaiBlocks validating voting node.
Right.
Because it has to see all the transactions in the world and check for doubles and then stomp on the ones that it doesn't like with its vote. So in the end, it actually doesn't improve the scalability compared to just on-chain scaling that much. The only difference is you don't have to store the whole blockchain. You can prune it.
Right.
Other than that, I don't see
people can prune it. Will a full node want to prune?
I don't know. That's an interesting question. In RaiBlocks, what do you lose by pruning, right?
Right. That's kind of what I was thinking.
But at the end of the day, if you're going to be this voting node, it sounds to me like you have the exact same resource requirement as a Bitcoin full node. The only difference is you don't have mining.
Right.
So you don't have that whole industry burning electricity. So that's more environmentally sound, I guess.
Right.
But that's always been the benefit of proof of stake, which is what this is. It's you have money and you use it to vote.
Right. Okay.
So I guess getting right about to the Sybil attack.
Right.
In Bitcoin, you have the two levels. You have unconfirmed and confirmed. And when it's confirmed, that mining power says $100,000 electricity says this is the valid transaction. You don't need to have any connection to your peers or have the history of the blockchain. That simple signature, that simple nonce in a block header without any other data, anything else, is enough to prove that that transaction is valid. Because
Right.
unless you think that someone was willing to throw away
that much money.
right?
Right.
Well, here you actually have to have the entire state of the network to know if the vote is going to be valid, right? Because how do I know that all these people delegated the money to him so that he could make the vote?
Okay.
Well, I have to know what their balances are.
Right.
So at the end of the day,
Yeah, see, no, that's one thing that I was wondering when there's proof of stake delegated proof of stake. That does make me wonder, okay, so if a bunch of people are staking, that's data that's additional data that has to be stored, right?
Right, I have
and then
to
they
know.
start changing who they're giving their voting stake to as well, then that's even more data. I mean, maybe you can prune it at some point, but it's not all super performant, I don't think.
right. So you have this giant node that's taking care of all the data from the whole freaking world.
Right.
And you go to him and you say, "What's my balance right now? Did I just receive this money or not?"
Right.
And he says, "Yes, you did." And I say, "Cool. Do I trust you?" Well, I guess I kind of have to, because otherwise I'd have to have everybody's balances in the whole world to see that you had the vote that you said you did to make this call.
Right.
And so that creates the opportunity for what I'm calling the network partition attack.
Okay.
So when I first joined the Nano network with my light client smartphone, who am I connecting to?
Oh, okay. Like, are you talking about? And you're on a mobile phone or something like that?
Which full node am I connecting to?
I mean, if you're new to the network, you won't even know.
You won't even know, right?
Who's who? Right.
Exactly. So if I connect to a malicious node, and the node says, "Oh yeah, I totally have $1 million backing me," and I say that you have this, and I say, "Okay, cool, you've got a lot of money backing you. Your vote counts for a lot."
Right.
Oh, here's the quorum of all the people on the network, but of course, it's all completely fictitious, right?
Right.
The fictitious quorum, fictitious balances, fictitious everything.
Right.
How would I even know?
Yeah, you would have to. You would have to start checking with other full nodes. But if you're new, you're not going to know.
You'd have to download
do
the whole
that.
thing.
Yeah. Yeah, it's almost like some sort of isolation.
It's
I guess that's why they call it partition.
It's an isolation attack, right?
Right.
You isolate somebody from the rest of the network the first time they connect, and then you're able to feed them a completely fictitious story. They'd have no way of knowing because there's no appeal to electricity to kind of get you out of that trap.
Right. And so do they address that here?
They don't really.
They do not.
Yeah, they say it's a Sybil attack is not possible because you have to have money to make a vote. But if the money itself is fake,
right.
right? So they don't really address it in their. It's like the primary attack vector I see against the system, and they don't really talk about it.
Yeah, I'm trying to remember what other white paper it was that I was reading where they actually talked about that specific. I don't know if it was EOS or what it was, but I think they addressed that one directly. But yeah, you're right. In this RaiBlocks white paper, I don't see anything like that.
So I think when it comes down to it, there's kind of like 3 levels of security. You've got copper, which would be unconfirmed Bitcoin transactions,
right,
based just solely on the fact that it's propagated and you haven't seen any conflicts in 20 seconds. That's good enough. Then you have RaiBlocks, which is like silver, like it's the next step up, right? It's like,
right,
okay, we've seen a conflict and we voted on it and it's good. This is the one you want. And based on the vote, you have more confidence. And then sort of like the gold standard would be proof of work, where it's like
multiple confirmations,
and it's electricity, right? There's no trusting anybody to keep track of the whole blockchain. It's just like, no, the mining is enough to say definitively this is this.
Yeah, so I'm kind of curious, your opinion on something like proof of stake or what RaiBlocks is using or versus proof of work. Do you see the space moving in a specific direction? I know they're dabbling more with proof of stake and they're doing some hybrid proof of stake, proof of work. Do you have like an opinion on one or the other?
I think they're both valid systems, right? If you give that the sort of framework I said, silver, copper, gold. If you're good with silver, right? If you just need small amounts of money to run a coffee shop or something,
right?
Who cares, right?
Right.
It's good enough.
You can take unconfirmed transactions, like it's
Yeah, heck, copper is good enough for $5 coffee shop purchases at that point, right? So nobody really needs that level of assurance. But if you're trying to run the world's economy, I think you might want
buying a house or something,
or transfers of between nation states for things like oil or natural resources.
Right.
I would like to see that proof of worked.
Yeah.
So I think there's different levels, and I think there's a space for everybody, and we don't need to fight each other.
It's more options. I guess that's a good way of looking at it.
I think of all the proof of stake systems I've seen, I would say RaiBlocks is the most interesting and has the best chance of working, actually.
Okay. All right, so once we get past the attack vectors section, then we are in section 6, which is implementation, where they kind of give you the nuts and bolts of what the actual specific technologies that they'll be using for some of the specific areas. Their signing algorithms looks like it's some sort of elliptic curve cryptography, which is pretty standard hashing algorithms. Nothing too new there. One thing that did catch my eye a little bit is that their messaging protocol, which I guess is how they're sending the transactions between different accounts, they're using UDP, which is apparently an alternative to TCP, which is how kind of like that's what the internet runs on, TCP.
Right. Most internet protocols use TCP, which is very heavyweight. It's like, hello, I'd like to talk to you, okay, and then we have this connection between us, and every time it's like I send you a message, you acknowledge you got it, and I send you a message,
right,
you acknowledge it. But it's very heavyweight, whereas they're saying, no, we don't want it to be heavyweight. So we're using UDP, which is basically, I send you a message, there's no acknowledgement, it's just I send it to you and it's done.
Right. But is there a way to make sure that it gets there? Or
you don't really know if it gets there, though. So it's used for like video streaming where it's like, okay, if you drop package, the frame just gets
not
corrupted.
The end of the world.
It's like, it's okay, right?
Right. So it sounds like they're using that and they are trying to keep the size of the transaction data as small as possible so that they can go over UDP. So then what exactly? So it's just lighter weight than TCP?
Yeah, because as a node, I don't need to form a connection to a peer.
Okay.
I can just blast a transaction at them and they receive it and it's done. I don't have to get
on UDP.
Yeah.
Okay. So would that mean like faster propagation?
That's
in the network?
idea, is the faster transaction propagation.
Which makes sense because if you are trying to become a more like cash currency, you want, hey, I sent you the money, boom, you received it, right?
Right.
Because whereas a lot of the other networks that are out there, it takes time for the network to propagate the transaction. So even if you're not looking for confirmations, it can still take 10 seconds, 20 seconds, even a minute sometimes.
Right. Well, the other thing is you have to, in a normal network, you have to form connections to your peers. I have to pick some set of peers and form connections to them.
Right.
So I've got like 10 peers I'm connected to, and I'm like heavyweight, like hi, what version are you? I'm this version.
Constantly trying to like maintain the connection with them, I guess.
Yeah, whereas this is just I just pick somebody random and just blast a transaction and I'm done, right?
Okay.
The other thing I think is interesting about the signing and the hashing algorithm that they've chosen here.
Right.
ED25519 and Blake2B, those are both invented by a guy called Daniel Bernstein. I don't know if you're familiar with him.
No, I'm not.
No, Daniel Bernstein's actually a really interesting guy. He's a cryptographer who invents algorithms.
Right.
So usually like the NIST or the American National Standards Technology does stuff like that. This is just some guy at a university who just invents his own algorithm.
And they kind of have like contests, don't they? At times they like to
yeah.
see who comes up with the best algorithms, hashing algorithms, encryption algorithms.
Right. But his thing is interesting because he's always about preventing government backdoors. How can we make the cryptography as simple and as fast as possible so we know that there's no tricks, there's no funny business?
Yeah.
Because you always kind of wonder with the stuff that comes out of the U.S. government is like, can we really trust it?
Yeah, because they would love to have a back door.
Exactly.
Right.
So it's interesting that they've chosen Bernstein stuff instead of the standard government stuff because it's like, okay, we're going to put our foot down and say, we want the stuff we can trust.
Does that make you feel more confident in at least the algorithms that they're using?
Well, the other thing about these algorithms is they're freaking fast. The ED25519 is the fastest elliptic curve that we have today. So it's it's not only is it optimized, but it's also freedom fighting too. So I'm kind of happy about that choice. It gives me warm fuzzies.
Well, what's wrong with a slow encryption signing algorithm?
There's nothing wrong with it other than it just takes more CPU resources.
Yeah. Oh, okay.
Your validating node has to do more calculation and everything just is more expensive.
Okay, but it's still not considered less secure just because it's faster.
No, it's just simply like let's just strip
all.
So
it's just more efficient.
Yeah.
Okay, cool. Okay, so one thing I noticed here is when we go into section, where are we? Section 6, which is implementation, and then the subsection is C performance. They say at the time of this writing, 4.2 million transactions have been processed by the Rai Blocks network, yielding a blockchain size of 1.7 gigabytes. From what I could tell, that means that they are using less data per transaction than Bitcoin, but it doesn't seem like it's orders of magnitude better.
No, it's like, it's like 2 or 3 times better, not like infinity better, right? They've optimized it, they've trimmed out the fat, they've got it down to its bare minimum, and,
maybe they're just reaching that lower bound, but at least it's a significant improvement. But honestly, if we really want any of these cryptocurrencies to become the next dollar or standard for currency, I think we still maybe have a ways to go.
I don't know. I think a factor of 2 or 3 is not enough to really make it meaningful.
Well, that's what I'm saying. We need things that are kind of like exponentially better. But how do you compact data to do that? That's the trillion-dollar question, right?
Right. And the other thing is they've given up a lot to do this because in their transaction format, they don't have scripts. There's zero programmability. It's simply I send money from you to me.
There's going to be no smart contracts. There's going to be no tokens issued upon RaiBlocks. This is stripped down, boom, cash, just money.
Right.
Just go.
And even things that you see in Bitcoin like multisig. Right. You can't do multisig on RaiBlocks. They don't have any programmable capability whatsoever.
Right.
At least according to this white paper. Maybe they've added it since then.
It'll be interesting to see whether that would ever be enough to prevent it from really catching on, or maybe it would be something where people use it for the basic transactions. If you need things that are more complex, then Bitcoin, Ethereum, something like that.
But you can't even run something like Lightning on top of it because you can't run the second layer solution because there's no programmability.
There's no programmability
at the first layer, right?
Right.
So it's RaiBlocks or nothing, right? If this scales to the world currency, you're going to have single signature, no multi-sig securing your stuff. You're going to have, it's just not going to work. It's just there's no Lightning network, there's no nothing. It's just,
right. Yeah, so once we get past this resource usage section, and we've already gone over quite a bit about the resource, then we get to the conclusion. So, obviously they have their conclusion. And so we're at the end of this episode. I'm curious. I'll let you go first if you'd like. What is your opinion, at least with regards to the technology and feasibility of RaiBlocks?
So I think we're seeing a trend of a lot of unblockchain projects, things that are not traditional Bitcoin inspired, hashing or proof of stake to build a blockchain with lots of transactions.
Right.
And I think, compared to the other alternatives like IOTA or Ripple, I think this is actually a pretty solid system.
Right.
It's simple. It's easy to understand. It makes sense. Everything seems to line up pretty good. I mean, as far as proof of stake goes, you have that fundamental Achilles heel, but other than that affects all proof of stake. So I think this is actually one of the nicest proof of stake systems I've seen.
Okay. Yeah, when I look at it, when I read through this white paper, it's definitely very bold. Okay, they're going back to the foundation upon which cryptocurrencies are built upon, which is like the blockchain, and they are really changing things up. And to me, on one hand, that's like, okay, if you want your currency to be something really big and bold and new and maybe really take over, then maybe you do need to kind of go to the fundamentals, change things around a bit. But it does seem like there's a lot of stuff going on here that's pretty untested. So on one hand, maybe it will scale really well. Maybe it can be great for things like cash or quick transactions. But there is that part of me that's wondering, are the incentives aligned correctly? This is very, very experimental. I'm not going to call it a Hail Mary because a Hail Mary sounds like something that is desperate.
Or that we're broken, right?
Right.
We haven't even tested the other models to see if those work. Will Lightning scale? Will Bitcoin on-chain scaling work?
Right.
Will other things work? Who knows?
Right.
So we don't necessarily need it, but it'd be nice to have if it's an extra trick up our sleeves.
Right. Yeah. So I think the big thing is maybe things will start working the way that they're supposed to, but once you actually start getting people using it, then scalability becomes an issue. And the question is, does this white paper, have they really acknowledged or handled or thought ahead about all the attack vectors? Because you can think of a bunch of attack vectors, but the attackers out there are very creative.
The attackers will always think of more.
Right. And it only takes one sort of attack to take a system down, and then it's essentially game over. So I think it's very interesting. I'm hoping that it works out well, but I definitely wouldn't bet the house on it.
I'd actually feel confident putting money in this system.
Oh, no, that's what I'm saying. I am actually planning, did already buy some, believe it or not. And of course, that depends on what the price is now versus what you think it could get to. I think last time I checked, well, I'm not going to get too much into those details. I'm not saying it's fluctuating.
I'm not saying investing, right? I'm not going to go out and buy RaiBlocks today. But what I'm saying is, if
you would use it.
If I had money in the system and I was using it to store money and to move it around to buy things, I would feel confident doing that. I'm not saying I'd go out and buy this coin
as an investment.
I don't give investment advice. I'm saying I would be confident having money in the system. regardless of how I got it.
Okay, got it. Well, for the record, I'm a little adventurous, but I did buy some Nano. Sometimes, we do these episodes, and one of the best ways to learn even more about something is, of course, to buy it and maybe start playing around with it. But obviously, they are still working on some of the wallets. A lot of the software and applications related to it are not quite built out yet. But I think probably by the end of 2018, you'll really start to see some of that going. Then it'll be really interesting to see whether it fulfills these sorts of promises that it makes in the white paper.
Yep, that'll be great to see.
All right, so that's our analysis of RaiBlocks/Nano. So until next time, this is your captain and William Swanson wishing you fair winds and following seas, guys. Set sail.
Ahoy!
Are you enjoying the Captain Crypto Show? We've only been around for about 6 months and creating videos for only about 2 months. But in that short time period, we've been able to take our ragtag crew and start building a fleet to bring you the freshest and most critical information from the new world of cryptocurrency. But we can't do it without your help. If you like our content, consider liking this video, sharing it with some of your closest mateys, and even consider hitting the subscribe button. Although we do include our cryptocurrency addresses in the descriptions for these videos, the truth is, me and my crew prefer not to beg for our coin. After all, plundering is more the pirate's way. So hit that subscribe button and come join us on this adventure.